Welcome back to the channel, your go-to source for in-depth financial analysis. Today, we navigate a market brimming with contrasting narratives. India is currently captivated by an IPO frenzy, promising historic windfalls, while global markets grapple with the complex interplay of a hawkish US Federal Reserve and a newly brokered peace deal in the Middle East. The Sensex and Nifty have shown remarkable resilience, often holding near the flat line at midday, despite global tremors. This delicate balance between domestic optimism and international caution sets the stage for today's comprehensive market report, as we delve into the stories shaping your portfolios. First, let's turn our gaze to India, where the National Stock Exchange, or NSE, has officially filed for its highly anticipated IPO after a decade-long wait. This mega listing, estimated to be around 30,000 crore rupees, or $3.5 billion, is set to become the largest stock market debut in Indian history. It's a structural turning point for India's financial landscape, potentially catapulting NSE into the ranks of India's top 10 companies by market value. This isn't just a listing, it's a monumental event that signifies the maturity and ambition of India's capital markets, capturing headlines as a defining moment for domestic and international investors alike. The NSE IPO is proving to be a jackpot for its early backers, with some investors eyeing windfalls running into thousands of crores. State Bank of India, for instance, which bought NSE shares at a mere 80 paise, stands to earn an astonishing 5,000 crore rupees from its 2 crore rupee investment, reflecting a mind-boggling 256,775% profit. Other institutional players like Temasek, LIC, New India Assurance, and IFCI are also poised for multifold gains, with their stock prices surging up to 14% on the news. Even prominent market gurus like DMart's Radhakishan Damani, an Infosys founder, and MIT are among the famous names set for a multi-crore payday. This listing also reveals how NSE makes its money, largely driven by the options boom, which has become a significant revenue stream for India's biggest exchange. Beyond the IPO excitement, the broader Indian market has demonstrated robust performance. Both the Sensex and Nifty 50 have gained for a remarkable fifth straight session, showcasing underlying strength. This rally has been led primarily by heavyweight sectors such as PSU banks, healthcare, and realty stocks. Key players like HDFC Bank, SBI, and ICICI Bank have been instrumental in pushing the indices higher. Max Healthcare, for example, jumped 6%, leading the Nifty surge in the healthcare sector, reflecting sustained investor confidence. Conversely, the IT sector faced headwinds, with Infosys falling nearly 3% and TCS share price dropping in early trade, as the Nifty IT index experienced the steepest decline among sectoral indices, indicating a rotational shift in investor preference. However, the NSE's journey to listing is not without its complexities. The exchange is grappling with lingering uncertainty over pending collocation and dark fiber cases, which have historically presented regulatory challenges. Furthermore, NSE has disclosed a significant 1,491 crore rupee settlement bid, sweeping aside a legal overhang ahead of its IPO. On a wider regulatory note, the Indian regulator is proposing new risk curbs and wider funding options as margin trading surges. These measures aim to enhance market stability and protect investors, reflecting a proactive approach to managing the rapid growth and increasing sophistication of India's capital markets, balancing innovation with necessary safeguards. Shifting our focus to the global stage, a significant geopolitical development has profoundly impacted commodity markets, the Iran peace deal. President Trump's signing of the agreement has fueled debate over U.S. concessions, but its immediate effect was a slide in oil prices. As the critical Strait of Hormuz reopens and stranded oil streams out, markets initially rejoiced, with stocks rebounding from an earlier Fed sell-off. The OPEC chief, however, has swiftly dismissed the IEA's supply glut forecast, signaling potential future volatility. This truce, while a diplomatic triumph, presents a complex dynamic for energy markets as the initial relief rally contends with long-term supply expectations. While oil prices slide, the US dollar has hit a one-year high, reflecting rising expectations of a Fed rate hike. Chairman Warsh, in his first meeting as Fed chairman, drastically altered the Fed's rate statement, with several members signaling a possible hike in 2026, though Warsh himself abstained from giving a specific forecast. This hawkish tone has built the dollar rally and created significant market uncertainty. Across the Atlantic, the ECB's lane indicated the upper range of neutral interest rates has crept up to 2.5%, while the BOE's Bailey stated holding rates is a sensible decision. The synchronized hawkish sentiment from central banks across the globe underscores a challenging environment for investors and hints at tighter monetary policies ahead. In global corporate news, Intel stock soared on reports of a major chip deal with Apple, marking a significant win in its turnaround efforts. This development suggests Intel is regaining ground in the highly competitive semiconductor industry. Conversely, Accenture shares tumbled after the consulting giant slashed its revenue growth outlook, indicating potential headwinds in corporate spending and digital transformation projects. Meanwhile, Snap's ambitious foray into augmented reality continues to draw attention, with analysts estimating its $2,195 AR glasses may have cost an insane amount to develop, highlighting the high stakes and vast investments required in cutting-edge tech innovation. The space sector also commands attention, with SpaceX stock experiencing fluctuations. While it saw a recent drop after breaking a three-day winning streak, Oppenheimer believes SpaceX has even more room to run after securing an AI coding deal, positioning it as a potential candidate for the world's most valuable company. However, the broader AI market is sparking concern. The godfather of AI has openly criticized Elon Musk's xAI as a failure, warning that current labs are risking a big bubble explosion. This sentiment is further echoed by observed trends where big tech's aggressive AI spending spree appears to be making stock buybacks disappear, as capital is reallocated towards expensive R&D and infrastructure for artificial intelligence. Beyond the tech giants, the broader market shows interesting movements. Chip stocks, in general, experienced a rally, underscoring the enduring demand for semiconductors despite broader market volatility. Companies like Vishay Precision Group, or VPG, are benefiting significantly from a manufacturing rebound and the increasing adoption of robotics growth across industries. Similarly, suppliers to GE Vernova are nearing a breakout, driven by the immense demand from the ongoing data center build-out, highlighting the infrastructural boom powering our digital world. However, not all signals are positive, with Itron, or I3, being flagged as a potential short position, indicating specific sector or company-specific weaknesses in an otherwise mixed environment. Now, a crucial look at personal finance and retirement savings. A recent study by Vanguard reveals fascinating insights. Women generally exhibit better retirement savings habits, yet they often have lower 401k balances than men. This discrepancy highlights systemic challenges, including wage gaps and career breaks, that impact long-term financial accumulation. It's a powerful reminder for all investors to actively review their retirement strategies. The data underscores the importance of consistent contributions, strategic asset allocation, and understanding factors that can impact long-term wealth growth, irrespective of gender, ensuring everyone is on track for a secure financial future. Returning to India, the regulatory landscape continues to evolve, reflecting the dynamic nature of its financial markets. The Indian regulators' proposals for new risk curbs and wider funding options in response to surging margin trading are critical. These measures aim to introduce more checks and balances, ensuring market stability as participation grows. This proactive approach, while potentially impacting short-term trading behaviors, is designed to bolster the long-term health and resilience of the Indian market. It underscores a commitment to fostering responsible growth and protecting investors in an increasingly sophisticated and vibrant financial ecosystem. In conclusion, the current market narrative is a tale of two distinct paths. India's financial sector is buzzing with unprecedented activity, highlighted by the monumental NSE IPO and the sustained upward momentum of its key indices. This domestic buoyancy stands in stark contrast to a global landscape navigating the complex aftermath of a Iran truce and the lingering uncertainty from a hawkish Federal Reserve. Investors must remain agile, discerning between the specific opportunities within India's growth story and the broader macroeconomic shifts influencing global asset classes. Vigilance and informed decision-making will be paramount in navigating this intricate financial environment. Thank you for joining us, and we'll see you next time.